All right, it's time for another chart study. Today was very interesting, and a lot of the ideas that I was thinking about watching the charts played out. So, starting out with the daily chart, got to start with the daily. I had marked up previous daily highs and lows as the draws and liquidity. This one down here, I could have put it down here on this last one, but always aiming for the low hanging fruit. I had the higher one, and then I use this one here. So those are the two draws on liquidity that I had. I was expecting this higher one to be hit in yesterday's New York session, and it didn't happen. But I was glad to see that it happened pretty soon after in the London session, and there was a nice power 3 setup in that session. So I will go to that real quick. So on the left side of my chart, I have the 3-minute of the NASDAQ. And this underline right here is the midnight open, MO. So it opened here and it traded up in the opposite direction that they wanted to actually take price. It traded up into the buy side liquidity where this red line is, the daily buy side liquidity. And then we have, let me go to the 10-minute real quick because it'll show it a little bit better. Traded up at midnight in opposite direction, had one more swing higher, traded down, pretty strong move right here, breaking structure, leaving a fair value gap, could have shorted. And targets would have been, a good target would have been down here with these relative equal lows. And as you can see, price did deliver down past those lows. The next thing I was looking at was New York Open, of course. And one of the things that stood out to me today about New York Open was just before the open at 9:30, like around 9:15, price started trading bullish. Now, from what I've noticed, I'm sure other people have as well, that price normally will trade in the opposite direction if they intend to take price. So them taking the price bullish minutes before the open just signaled to me that, okay, we're probably going to head bearish eventually. So start looking for price to deliver to the downside. Because why would they, if they wanted to take price bullish, why would they start moving price bullish right before? That would tip off everybody. So, but it's manipulated. So this is just getting people in long and just then taking out their buy stops down here probably. But as you can see, traded up. They took out these sell stops up here, then delivered down very strongly. And price traded all the way down to that next level of liquidity on the daily. I didn't know that would happen today. I didn't think it would, especially when price was kind of in this middle area, because I'll draw it on the 15-minute. Earlier today, I had this drawn up. Not this fib, it's a different one. Hold on. Premium market, discount market. Normally, price will trade from premium to discount, discount to premium. So price was in a premium. I was expecting price to trade down into a discount. So I had a pretty strong bearish bias earlier because we had the sell side taken out, and then price was pricing down, creating lower lows, and then as I said in the morning, it had like a quick push up, and then it took out sell side and then strong drop. So I was I had some confidence that there would be a movement down into discount territory. Now, around this point, I had no idea if it would consolidate here, if it would move up to create, a new high or just a higher high. But ultimately, it just blew through this and just kept pricing lower, and it moved down very strongly. So with that idea in mind, once price got down into about this level right here, I was thinking in my head, there's a high probability we probably will reach this buy side liquidity. Like if price got this close and it's moving down very strongly, it's been a very strong bearish day, then more likely than not, then price will trade through this. So now that the bearish frame is set, the bearish bias is set, one of the things that I like to keep in mind is where real support and resistance is, and it's in this case it would be these up close candles. So if I'm bearish, then up close candles should not be violated, and as you can see, price trades up, respects these up close candles, acting as real resistance, and then trades down, ultimately delivers to this price level, the buy side liquidity, the daily low that I had marked up earlier. So as far as potential trades that could have been taken, price on the New York Open, there could have been a trade after the New York Open or right after it if price would have came back into one of these fair value gaps. But as you can see, price just dumped and didn't come back up. But all the requirements would have been met. You would have had the liquidity grab, the structure break, the fair value gaps. It just didn't trade into it. You can't chase it, let it go. If you would have continued to watch price, there would have been some nice setups later on in the day, right here, in the afternoon. So price, like I said, up close candles should not be violated. Looking at the 15-minute, price trades into these up close candles. After that, you're not expecting this area to be violated. After that, you get a strong move down on the lower time frame, the 3-minute, breaking structure, creating a fair value gap, and you could have taken a short here, push down, another strong push, fair value gap, could have gone short here, and even if potentially somewhere in here you could have gotten short, there's fair value gaps in here as well, but you were close to the objective, risk reward might have not worked out. So there were opportunities today, I think some good ones, and yeah, one of the things I guess I didn't mention was after lunchtime, you kind of treat it as the same as you would like right before New York. Like if you're coming to the New York session, you look for areas of liquidity, relative equal highs, obvious swing points, places where price might go to take out liquidity before making the real move. You take that same approach that you take in the morning to the afternoon of session. So this gray area marks up the lunchtime, so this is all after lunch. So if you look left, you look for obvious swing points. Here's one, and here's another. Now, like I said, I have a bearish bias, so we're looking for things that align with that bearish bias. Price trades up above this swing point here, trades down, breaks structure, creates fair value gaps, and those potential trade setups. So everything just kind of fits in like a puzzle, and it played out pretty nicely today. And that's all I got for this one.